Right now, there are at least two key questions hanging over the American business scene. Firstly, is the American economy finally recovering? And secondly, what are American corporations going to do with that extraordinary $2 trillion cash pile sitting on their balance sheet? Well, I had a chance to put these questions to Scott Bok, CEO of Greenhill, the investment advisory boutique, and the first thing I asked him is, what exactly is the outlook for the American economy in 2012?
I think it's actually beginning to show significant signs of improvement. I wouldn't be as positive about Europe and other parts of the world, but as I go around and visit companies, even over the last week, in the energy industry, industrials, consumer products, I mean, people are pretty positive on how things are developing, and you see that, of course, in the unemployment statistics and other stats as well.
And how is that actually impacting M&A activity? Because we hear a lot about companies sitting on $2 trillion worth of cash on their balance sheets because they're so scared and uncertain about the future. Is that making companies too scared to do any M&A?
I think what happened in the M&A market really was you had a significant upturn beginning last year, and for the first 7 months it looked like everything was kind of back on track for a normal cyclical recovery. And then around August 1st we really hit an air pocket, and clearly it was as a result of the problems in Europe blowing up again, and a lot of dialogues got put on hold, terminated, and things just kind of quieted down. What I'm seeing now, and I think it is driven more by the economic statistics picking up, is that companies are more optimistic and they are now looking for opportunities to put their cash and even their stock to work in some cases.
And what sectors would you expect to see that play out in most forcefully in the next couple of
I
months?
think we'll see it, if I had to pick three, I would probably say energy, healthcare, and industrials. I think each of the three, you have a lot of companies that have significant cash resources. Their share prices are now up. I mean, it's amazing how much stock prices are a driver of M&A. The simple fact is, if a company's stock is up and a CEO is feeling better about his business, he's more likely to be feeling expansive and look for opportunities to acquire.
And from your point of view, are you expecting to see the US as a main focus for this activity? Or are we really moving to a phase where there's more cross-border activity, or say north-south? I mean, Latin American companies looking at America, vice versa.
It will be very much driven by American companies, but I would also add the Japanese companies to that group as an area where I think there actually could be quite a lot of M&A interest, and I think a lot of activity will be cross-border. I think both Japanese companies buying in the US and Europe, US companies buying in Europe, and of course even selected European companies coming back. But you know, most industries now really see themselves on a global playing field. Many companies are quite strong in their own market. They're trying to figure out, how do I globalize, how do I get into emerging markets, and so I think a big part of activity will be cross-border.
And if there is another Eurozone crisis or bout of jitters, is that going to dampen down that activity, do you think?
Well, I certainly wouldn't be brave enough to say that it won't dampen things. We've really had 2 years in a row now where life looked pretty good at about this time of the year. And the economies looked like they were improving, M&A looked like it was improving, and both times in the summer, 2 years ago was kind of early summer, last year it was more like around August 1st, Europe blew up and things kind of slowed down again. I would like to think that won't happen again, certainly no guarantees, but I think people have come off the idea that there's going to be some Sunday night press conference that's going to solve things in Europe. It's going to be a long slog. It feels like they're making progress. It feels like, whether Greece is long-term part of the euro or not, that Europe will find a way to keep the euro together. And I think to that extent, maybe having had some ups and downs, people will be less likely to be thrown off course by another blow up there.
And what does the current squeeze on Wall Street mean for a group like yourselves? Because certainly a few years ago people were very skeptical about whether boutiques could actually survive.
Right.
It was all about the big boys. Now, though, we're moving to an era where we're seeing more people actually leave the big Wall Street firms, and in some ways perhaps boutiques are coming back into fashion.
I think there are two reasons. One is that clients are increasingly worried about conflicts. They see the big banks as primarily driven by their own trillion-dollar balance sheets, their own principal trading, their own investments, whether long-term or short-term hedge fund-like investments, and they don't like that. They'd rather have somebody who's a pure advisor, who's on their side, who has no other interest in a situation. And I think that's what's driven the slippage of market share to firms like ours. And then the new phenomenon, which is in a way even bigger, is the regulatory response to the financial crisis has really created a situation where the whole structure, the whole business strategy of those big banks is in question. And I think as they try to remake themselves, that will create opportunities for us.
and as regulation weighs on your bigger competitors, are you finding it easier to hire staff? I mean, because originally you were founded by a group of people who came from primarily Morgan Stanley. Are you basically conducting raids on some of your old employees?
Well, we very often wait for the phone to ring, and we hired a tremendous number of senior people in the 2008, 9, 10 time frame. Clearly, the financial crisis was happening. Many talented people wanted to get out of those big, what appeared to be very risky firms at that point, and so we hired a lot of people. I think what I probably wouldn't have guessed at that time is that we are already back to that kind of a period, and maybe it's even more dramatic than it was in the 8, 9, 10 period, where people are now saying, this is not a cyclical downturn. I'm not sure my firm's business model works anymore, so why don't I go to a place that focuses on advice, which is what I do for a living.
Thank you. Well, best of luck in trying to forge a way to not merely survive amongst the big boys, but actually take some of their staff and some of their business. Thank you.
Thank you.